Alrighty, what is going on? Today we are going to be doing a quick lesson on volume profiling. So, let's get rid of this. What are we looking at right now? What is this madness? Okay, 15-minute bar chart. Oh god, I'm playing in the background. Go away. Okay, so each one of these bars, 15 minutes. If you don't know what these are, go learn other stuff before you watch this. Okay, so now we understand that. What is the time period? Well, this is the RTH, regular trading hours. For Russell, that is going to be from 9:30 at the US Cash Open to 16, I think it's 16:15, I believe is the official number. I think these end, oh, okay, they do. 16:15 when the CME does its little shenanigans. So, full US session charts that we're looking at, and what is going on behind the scenes. So let's just get rid of there we go. This is easier to look at. So each one of these is simply just a distribution of where price traded that session, and it shows you on a histogram the amount of volume that traded at each price. So if we look at this one, we can see not much volume traded in the 1676 area, and a lot traded right here at 71. So why is this important? Well, let me finish explaining these. So point of control is this red line, and that's simply the price at which the most volume traded. Okay? And then these dashed lines are just a value area. So it's just going to be 70% of the entire volume is going to be enclosed in these calculated lines, just to give you an idea of what value might be on a standard distribution day. And let's go into some of the more nitty-gritty details. So if we look at, say, something like this, this is a balanced day. This is a day where we had an auction in which we came down to here and we couldn't really find many more sellers, so we started to auction back up to here, in which we couldn't find any more buyers, and we just went around. At least that's what it looks like. It could be deceptive, so that's why we like to keep our candlesticks on. But yeah, okay, so pretty much that's what happened. We opened up here, traded down to the bottom, couldn't find any buyers, traded back to the top of the auction. So, rotational day. Cool. That means we have value. So this was a day in which we had established where value is. All right. Now, this looked like a gap up, trend down day, so we just keep going. I want to find a specific type of day. Well, I mean, this one's interesting to talk about. It was pretty thin in excess here and here, so this is really what you wanted to be paying attention to from this day, is this massive, what we call high volume node. These are somewhat important based on the price action, so if I pull those candlesticks back up, we can take a look and see what actually happened. This would be a double distribution day. So this is a day where we have a distribution up here, separated, so it's a high volume node, separated by a low volume node right here, separated by the high volume node right there. So that's a double distribution day. And then you can start getting into the like kind of market profile-y type stuff. Like this probably looks more of a P-shape type day. I'm not exactly sure, but that's kind of the vibe I'm getting from it. So there's a lot of different ways to look at it. So, okay, cool. Now you know kind of what they are. Let's talk about how you can actually apply them and use them, right? So let's put the candles back on. Get that candle action. So if we get that candle action going, what do we see? So this was that day where we had value. What actually happened this day is we came from up here where we opened and drove down tested the previous day's point of control. Looks like almost to the tick. Found buyers again. Came back down to the point of control. And then found buyers again. And went back up towards the open and the highs of that day. So, what does that tell you? Well, that tells you that the previous day's point of control might be a little bit of an important metric. It might, once in a while, be used as a support or resistance. Oh, look at right here. It happens again. We open down here, come all the way up to the point of control of the previous day, and then come back down. Interesting. Interesting stuff we're noticing. Let's look at this day. So this day, we open up down here, drive all the way up to what is this? Kind of the value area high almost of this day, getting in that region. And then we drive down. Now this isn't necessarily that close to the point of control, but what is it close to? Oh, it's a high volume node. Look at that big ass distribution of volume. Look at that. Juicy. Okay, cool. Now, if we look at this, we have basically 3 days where we're kind of not going anywhere. I mean, we're starting to go somewhere, but with this push up and all that action, what if we just put it all into one big thing? What would that look like? Let's try it out. Let's see what it looks like. We'll go through today. Why not? Whoa. Pretty fancy. All right, so now we have 1, 2, 3, 4, 5 days in a larger composite. And what do we notice? Well, we notice we have a large distribution of the volume trading up in this area. We've got this very prominent low volume node right here. And then we have another distribution starting to form down here, creating kind of that double distribution, right? So how does this all help us with our trading? Well, tomorrow, I'd be looking at a few things. One, I think it's important to note that we have the point of control going down, going down, going down, going up, down, and then up. So we're not really in that consistent of a market. If you look back to when we were uptrending, point of control, higher point of control, higher point of control, higher point of control, higher point of control, etc. It keeps going up, going up, going up. What's the first sign that we hit trouble? Oh, the point of control is lower than the last point of control. So just little things like that might give you a hint to how the next day is going to follow, or what the current market condition is starting to do. So if we look at, this is kind of crazy to watch because it was so fundamentally driven. But if we take this composite, if I can move it, there we go. And let's move it to come on, select. Do I click this? Yeah. So if we move it, ignoring, just looking at what happened in the RTH session from yesterday, if we were preparing for today. Okay, so this low volume node still exists. So we have a low volume node right here. Let's take a note of that. We'll say, boop, little low volume node. And what do you already see in the Russell in today's action? Oh, what do you know? That's where it ends up turning around. Interesting. Interesting stuff. So we have a point of control from the previous day. We'll mark that. Previous day's point of control. We have a low volume node here. Okay. And now if we're trying to establish value from what happened in this previous day, you can see we had kind of trending going on here. So trending is going to be considered price discovery. If you're in price discovery mode, you are doing what? You're imbalanced. If you are imbalanced, then you do not have value. You're trying to find value. So the question becomes, where did we end up finding value yesterday? Well, we found value down here. We stepped around here for a little bit, tried to get something going on here, but really this distribution down here is the more or less the value area. So I'm just gonna, for the sake of showing you this, just highlight, say, this major distribution. So if that's what we're gonna call the value area from yesterday, because that's the area from which we have kind of this nice bell curve distribution forming. So we're going to ignore that because that just looks like some big order got filled down here. And up here is all trending, so we're not going to consider it value. So if we take this into consideration, and then we look at that micro composite, when we get this bigger low volume node, we can start to kind of see what this market's shaping up to be. So what actually happened today was a gap lower. So we have a gap lower at the open off of that geopolitical news. Now, with a standard technical generated gap, you typically want to see it come back and retest. Say you gap up. So you overnight they rip it up higher and you have a gap up. The expectation for that next session is that it'll firm up the prior value area high or point of control. So if in this case we gap down, so the expectation is we at least test this value area low, if not the point of control. So you already are coming into this with the concept that you have a higher probability of testing that. All right, what do we get at the open? We get a opening drive. That is a strong signal from the initial market participants that they want to buy this market, right? So that is cool. That's great. But are we really convinced yet? You know, I'm not. I'm not convinced that we are really accepting what has happened overnight just yet. So the next, 15 minutes, we're still chopping around down here. Where things get interesting is when we break back into this bigger rectangle, this value area, and into that previous day's point of control, and we just start to hold and hold and hold and hold. Because what is this? This is acceptance. This is acceptance into the previous day's value distribution, and that expectation is now that we were at the value area low, accepted into prior day's value. So we should now move to the top of value. And in this case, we move to that top of value as well as this low volume node on the micro composite that we formed. Right? And then where do we go? Well, now we're at the top of value. We're in an auction. So back down to the bottom of value. Okay, we're at the bottom of value. We're in an auction. Where are we going to go? Top of value. Crazy stuff, right? So if we were planning for Monday, what do we see? Well, we already talked about this distribution being established value because we start up here, come down here, and come up here. So we're not trending. This is consolidation. This is rotational behavior, meaning we can consider it when determining value. All right, so that's good. And then today, what do we have? Well, we have another rotational type behavior day. So what do? We have a 2-day balance. Let's make a microcomposite of these 2 days. Cool. And what do we see? Look at that. Nice little value area. We have a high volume node up here we're going to look at. A lot of this is going to be based off of geopolitical news and some orders getting filled and whatnot, but it's still significant. So how would I make my prep? Whoa, go back. Well, I mean, there's a lot of other things that'll go into it, but just purely using this tool, I would say, okay, so right around here, if we want to include those other wicks, we can, just for the sake of including them, right probably here. We're going to say this is our bull zone. meaning this is where we're saying, generally speaking, we're entering a lower end of this auction, and we're expecting price migration back up to the top of the auction. I might even go as far to, yeah, I might even draw it like this, where I would just have it like that. And because this, I wouldn't even say this is really for the auction part. This is more of a high volume node that we ended up forming. But at the same time, I'm not about to get that picky within a few ticks. You know, what's 5 ticks in the Russell? Okay, so we have that. And then what does this become? Well, this becomes the top of the auction. So that's going to be our bear zone. All right, so now we have an idea of where this auction top and bottom is. We're going to call this area right here a significant high volume node that we want to pay attention to. And where this will become important, it's kind of a big node to look at. I don't like that. Okay, so why would this be important? Well, you might, say this market tried to get imbalanced up, you might see it kind of fake up into here and then get rejected off this node and then fall back in with a false breakout. So if you were going to play this imbalanced up, you might want to wait even just a little bit longer for us to more or less clear and accept into this node of volume before trying to press it into this value area. Because that's what I would really be paying attention to. And then I would even go as far as to look back at this composite and see where the main nodes are. So if we do draw this back and cover part of this, we can start to see. Let me delete some of this. That this low volume node is forming with these value area highs. So that's good to see that confluence. I think this is worthy of taking note of. We see that act as support and resistance a few times. So if we did go imbalanced up, this would be a good target for you to take a scale. And say we do one of these jib jabs where we're up here, we start to gain acceptance. Oh, we come up here, we come down. Maybe buyers do we set a trap low. Then we come into here. Okay, now what are we doing? Well, we're accepting into this bigger distribution these previous days. So at this point, the next area of interest for me would be up here. Right, so we can say, and this is a significant end of auction. So I would call this a bear zone. Maybe a tick up. All right. So we have our ideas of where the market might go if we go imbalanced up. We have an idea of what the current state of the auction is. We are rotational, so the only plan right now would be to fade these extremes, be a buyer down here, seller up here, buyer down here, seller up here, until proven otherwise. Then we can start to go up. If we start to go down, where's our last? It's over here. So I would say this is significant. Really choppy profile that day. Not a fan of that. And you got to remember about this is that it's very much an art. Well, that was convenient time for my mic to die. Okay. I'm going to be returning this headset because that battery just got charged. Where was I? Now I'm confused. Oh, we were going to mark this high volume node. Okay, so I'm going to call it like that-ish. Because now we have some places where we would expect the market to reach if we break below, some places above. So that's kind of the goal for any prep, is to have an idea of the current state of the auction here to here. And if we go unbalanced up, we're looking for targets up here. And if we go below, we're looking for some targets down here. The key to creating this is really so the most recent distribution is going to have the most value. So the most valuable distribution on this chart is this one right here, this most recent one. And that's going to be the one that overrides any of these. And which is why, I mean, I could even justify putting this bull zone or a bear zone down even further, because it is kind of a hard cliff on even these right here, that orange distribution and this orange distribution. So I'm not going to keep yelling about it. But how do we what are we doing? So we're justifying these low volume nodes, these high volume nodes, creating a distribution in which we have a value area established and trading from the value area high, value area low when we were balanced, and trading to previous value areas when we are imbalanced. Auction market theory. Look it up if you haven't. You probably have. And when we have multiple days of balance, we create a micro composite like this to merge them into one, so we can look at both days holistically. When you have a high volume node, you want to see it go into it and consolidate for a bit, and then accept it and push lower if it's a lower node, or reject it and come back up. Low volume nodes are typically seen as areas where the market is not interested in trading, like right here, and it's seen as resistance and support. So if we do break above into this area, I would expect that if we did come back down here, this then would serve as a support. And that is the introduction to volume profiling.